Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 15th of April. Starting off with the FTSE 100, who's managed to withstand most of the pain that there could have been over the weekend. We've just backed off from the 8,000 zone, still within hopefully what is a mid-move consolidation, and heading up to 8160 now, which is the top of that December rising trend channel. We do break down, which I presume some people may be fearing, below 7880, then the next area down would be the floor of the channel, 7770. The other thing to look at, apart from 7880 and potential support, is whether we stay on the right side of that uptrend line in the RSI window. That's around RSI 57. So that could be a break of that line, could be a leading indicator on a breakdown for the FTSE from record or near record levels. Moving on to the DAX, and here it was not looking great even before the weekend's excitement, but so far we're remaining effectively within that rising trend channel from the beginning of October, and also above the 50-day line, 17,700. The trigger for a new leg to the upside would be 18,100, which is an April resistance line. Above that, then obviously we're hoping for a move through 19,000 and beyond by the end of next month. At the moment, probably the most favored scenario is that we will have to test the 50-day line, 17,700, and even if we then head higher, RSI now back above the neutral 50 level, which is a positive, and so I think you could say the performance today is probably as good as could have been expected. Onto the Dow, and here we were almost anticipating the events of the weekend, but below 38,000 gave the risk of a move down towards the 37,000 area. There was some support there from the end of January around 37,800, and hopefully that will kick in later today. The negative here is that we had an RSI failure at neutral 50, and we're heading towards the oversold area near the RSI 30 level versus 33 at the moment. Hopefully at that point the market would have a rebound. Over to Bitcoin, where the rug was well and truly pulled over the weekend, although it was not exactly a surprise. We were fearing that below the 50-day line, currently around 67,000, there could be a retest of a 60,000 area, which I suppose we got over the weekend. The current situation is actually quite not a bad rebound, but a rising 50-day line there at 66,800, end of day close above that, and we could be heading to the 72 to 74,000 area, basically the record high zone again. But the key here is staying above the 60,000 level. Moving along to gold, which obviously has been excelling in terms of the performance of late. Rising February trend channel there, the floor of the channel there around 23.45. Above that, we're looking for as high as 24.80 by the end of next month. Obviously, this is Friday's pre-weekend geopolitical chart. On to crude oil as well, where we've got a position where we're waiting to see whether this market can hold above $83.50. Above that, looking for $90 hopefully later this month, and then up to as high as 95 maybe for the end of next month. Golden cross already in place there earlier this month between the 50 and 200-day line, so expectations remain pretty strong. Moving on to the stocks, and starting off with Asiamet, which seems to be reviving itself after a long time in the wilderness. Here you can see we broke above the 50-day line back on Friday, rather simply looking for a move towards the 200-day line and post-November resistance at 0.93, hopefully by the end of next month or even sooner. But the key here is remaining above the 50-day line for the first time properly since back in August. Also seems to be a better sentiment towards Blencowe, and that is evidenced by the unfold gap to the upside through the 200-day moving average at 4 3/4 above that. Looking for the top of that broadening triangle from back in, basically this time last year, as high as 6 1/4 pence, hopefully by the end of next month. On to a stock which I cover occasionally, and it's back again, GSChain, and here you can see that we're up today, but we really need to break that 50-day moving average around the 1.05 level, really, to give the shares a chance of heading back towards basically resistance on the way down through 1.5 pence. So early days there for that situation. If we do break up over this week, then maybe 1.5 could be seen by the end of next month. Otherwise, it's still in that bear trend. Moving along to Hydrogen Utopia, there was a decent RNS today. Rising trend channel there from back in September, top of the channel there, heading towards 16 pence, and we're looking for that by the end of next month, while we remain above the rising 50-day moving average at 8 pence. You can see there's been a double bounce for the RSI at neutral 50 over the course of April, and the unfilled gap to the upside above a rising 50-day line suggests that this is a relatively strong or very strong situation. So hopefully 16 pence on the cards there. On to Harvest Minerals, which has also rehabilitated itself. Here looks as though we're going into a bull flag ready for a new leg to the upside. Obviously, the top of that gap there from back in September around the 2.1 pence area. So we're looking for an end of day close above that to give us up to 3.2 pence, basically this month's high over the next couple of weeks. Ideally, we stay on the right side of the old March peak at 1 3/4 pence. A stock where angels have been fearing to trade for quite some time has been Invinity, but looks as though we've got a chance of a breakout out of this falling wedge that we've had in place for the best part of a year. The view now is that at least while there's no end of day close back below the floor of the gap there at 22 pence, we could retest the late February resistance at 28 pence, ideally by the end of this month. Great performance and good RNS today from Kavango, and here unfilled gap to the upside through the old support there around 0.92 from last year, pre-June support. Above that, we've been looking for that resistance line projection at 1.37 pence. Hopefully we'll get that by the end of this month. Best case scenario would be a move towards retesting the 1.5, 1.6 area, which was basically 2023 resistance. But the key here is staying on the right side of that 0.92 number. Onto Landore, which actually is one of the better looking charts at the moment. You'll see why in a second. We've got that rising trend channel base. We had the move higher on Friday, breaking neckline resistance to 2.4 pence. Above that, we're looking for the top of that rising trend channel, 3.3 pence, perhaps as soon as the end of this month, given the way that the 50-day line is now curling up nicely. N4 Pharma is next, and although Pharmas are not normally great on the London market, this one looks as though at least it's having a go at recovery, breaking through the 50-day line with an unfilled gap to the upside. That's at 0.75. The longer we stay above that, the greater the chance of we move to the top of the January triangle there at 1.1 pence by the end of next month. Sareum, another stock which has not exactly been helpful to the bulls, but here we do have a gap close by signal. So the top of that gap there from back in March, around 14.5 pence. Above that, we're looking for the shares to fill the gap up to 27 pence by the end of next month, which is also the current area of the 50-day moving average. But the key here, staying on the right side of 14 pence. On to the last three. First one is Sondrel, where the fundamentals make you want to look the other way, but at least we have a rebound off this falling support line there from back in December. That's around 2.7 pence, and recent neckline resistance to 3.5 pence is also, or has also been broken today. Above that, there's a chance of heading up towards that gap area at around 5 3/4 pence, the initial gap down that we had back in April. So punchy call there perhaps to head back to 5 3/4 pence, but at least while we're above 3.5, that is a possibility. On to Synairgen, which I've been covering perhaps more than I should have in the recent past, but interesting with the gap through the 50-day line and the rising 50-day line now. The idea here is that the longer we stay above March resistance at 6 1/4 pence, the greater the chance of a retest of the 10 pence area by the end of next month. And the more end of day closes we have above the 200-day line, 6.8 pence, the better. Finishing off with Tertiary, which seems to be on the front foot at the moment, or has been at least. We've got the 200-day line here at 0.105, so it's while we're above 10.5 on that 200-day line, looking for up to 0.16 by the end of next month. I suppose there is some resistance there at 0.12, so some cautious people may want to see that broken before making their mind up. That's it for me today. More updates tomorrow.